Well, we are live here. Tackle Trading's halftime report here in Utah. The weather outside is frightful, Matt. It just dumped some snow on us overnight, but that usually will melt by about midday the next day here in December. It feels like the holidays, though, whenever it starts to snow and I see the markets rallying. It's a Christmas rally. There's a lot going on in the market. How are you doing on a Monday, Matt?
You know, Tim, I woke up today and I was like, oh my goodness, we are like 9 days from Christmas. And I did not even realize it. Like literally did not even realize. I woke up just kind of shocked. And my first thought was, what am I going to get my wife?
Oh, dude.
Yeah, like
you haven't done that one yet.
Yeah, I'm there right now. So I'm in this internal debate about what I need to get a woman who gets everything herself.
Yeah.
Like I'm in that kind of dilemma here, and I want to do something special, but I got 9 days.
Well, you know, I had the same thing happen this morning, Matt, but I actually woke up and said, well, what am I going to get my wife? So I turned to her and I said, honey, what do you want for Christmas? So you could just ask her.
Matt, don't get a Peloton.
The hell? I'm going to do that out of just, yeah. Okay. I'm not getting a Peloton. I'm not going to do that. But I'm still, I haven't done the, hey, honey, what do you want yet? But I probably will, because I'm not the most creative when it comes to gifts. And I'm not good at keeping secrets. So
I'm a terrible gift giver. I've been that way my whole life. I really, I have a hard time with it. I don't like consumerism.
As your brother and business partner, I can attest you're a terrible gift giver.
I'm terrible at it. It's just not a skill set I've built over the years. And so 9 days from Christmas.
Don't care that much about other people.
I don't think that's what it is. I don't think that's what it is. I'm a pretty, I'm a loving guy, Matt. I'm definitely a very, very sweet boy, but not great at giving gifts. Yeah, no, not great. All right, let's get down to markets. Let's talk about what's going on out there. Obviously, optimism.
Let everybody come in for about 2 minutes, right?
You did a good job with that.
That works.
I like, dude, I would love a challenge at a long filibuster session in the Senate, like 2 days. I got to read the phone book. I've got to just burn time.
Oh man, I wouldn't even have to. No, I'd go storytelling through history.
Yeah. Just start telling stories. That's funny. Markets are up here, Matt. There's a lot of news actually across home builders as well as some movie companies. We're going to talk about Boeing again, as well as Pacific Gas, which we have been referencing here a little bit. We'll get to individual corporate news, and we also always break down the sectors on our Mondays. But here we are carrying through over the weekend, Matt, and the phase one deal seems to be putting into place. They're not going to sign it until January, by the way. The details, we still have not seen them. We know how contracts work, Matt. It's not necessarily a done deal until it's a done deal. But the market is pricing it in that way.
I get it, but let's just remind people of how negotiations work for a second, right? Nothing gets done until that ink is dried on the piece of paper. That's number one. Number two, we also had news today that, there's some, slight hiccups. I don't want to throw any wrenches into that, but there might be some slight hiccups in the USMCO deal. And so it's going to be interesting. And it looks like we tried to sneak some little parameter in there, and Mexico wasn't very happy with it. So they're going to have some further discussions. And, I fully expect that deal to get done, right? Just like I think everybody in the world does. But those are things that can happen between the time you are on the phone call and you're like, yeah, done deal, we're good to go. And then, there's another 3 weeks, 4 weeks, a month before the actual deal arrives. So it looks like the deal is going to be done, but it's not done until the ink's dried up. But we are starting to see some parameters of what's in that deal. And obviously there's a lot of agricultural purchases and soybean purchases and all that jazz. And the number that's being thrown out there is that China's going to be buying about $200 billion worth of U.S. goods in general, including the agricultural products. It also looks like, and these are the things that I want to see the details on, because simply because China says, hey, we're going to crack down on IP theft. Okay, thanks. All right. That doesn't mean anything, right? Just because China says, we're going to force technology transfers and we're going to do this, it doesn't mean anything. How are you going to do it? What are you going to do? What are the regulations that are going to come out? We want to see some of that detail, but it does look like the deal's a little better than what I originally had kind of thought and heard and analyzed. So I think that's just a gentle reminder to all of us to be patient while these things are being played out, and don't rush to judgment until we start to see the details. So 200 billion is a big number, Tim. That is not a small number. I mean, we're not talking 50 billion. 200 billion doubles the amount of exports we send over there to China. So if that number does come out and we start to see the regulations on how China is going to crack down on IP theft and forced tech transfers, yeah, then we can go from there. And then we got phase 2 and phase 3, the trade deal coming out probably, a couple years from now.
Well, and I don't think we're going to get a fully finalized deal until we're through the election. I do believe that that will go that long, Matt. There's too many other details they got to work through. I mean, this has been already, when did we start this trade negotiation and this little trade spat?
About 19, 20 months into it.
Yeah.
I think we are.
Yeah.
But,
so
I mean, if you believe, and again, if you believe the 60% being the phase 1 trade deal, maybe Trump can get it through, Tim. Like I said, I don't think we should rush to judgment. I think we should wait to pass judgment until we see details.
Yeah, it's going to be interesting. Obviously, the markets are maintaining bullish rankings, and over at Tackle Trading on our newsletter on the weekend, we kept a bullish ranking on the S&P 500. Real strong green candle, Matt, actually pretty good volume. Now you're up extended from the moving averages, though. It's kind of like you're going to go do your stock picking. If you find something new and fresh that's triggering today, Matt, would you put new money into bulls today?
Oh, yeah, absolutely. I mean, you go look at that bullish option report, Tim, and I went through it this morning, went through the stock report and the options report this morning, was in the scouting report meeting on Friday. And Tim, you have numerous amazing triggers breaking out of high bases, retracements. Most of the stocks on the options in the stock report that are triggering today are based on breakouts. I mean, take a look at Autodesk for a second, just, to kind of go on your question, Tim. Take a look at Autodesk this morning.
Mm-hmm.
Okay. Nice little, high base type cup and handle type pattern here on the short term breakout. That's textbook, Tim. I mean,
that's a beautiful breakout.
That is a textbook breakout that if I was scanning the historical market to find a screenshot that I could put into a presentation to teach short-term cup and handle formation on a breakout with a continuation pattern, that's what you want to see, right? Take a look at Apple today. Absolutely, just a juggernaut year to date. Before today, and it's up 2% today. Before today, it was up 70% on the year. Now it's up 72% on the year. I'm not going to be the guy that says this is going to stop running because it's too strong.
Mm-hmm.
Right? I mean, just let's not be that guy. Let's not be that guy that says, "Hey, let's not buy the breakout." I get it. I get the hesitation, and I get it. Keith King's been saying this for 6 months now in those scouting report meetings. Plug your nose and buy. Plug your nose and buy. We see the economic data out there. We see the earnings data out there. We see the geopolitical situations out there. The one way, and what he means by that, guys, is the one way to plug your nose and buy is to put the blinders on. Don't focus on the economics. Don't focus on the earnings. Focus on the technical analysis. When these trends want to change, we're going to see double tops. We're going to see double bottoms. We're going to see slowing momentums. We're going to see patterns in the market that indicate that this market is slowing down. But as of now, this market's not slowing down. And in the scouting report meeting on Friday, after we got done with the halftime report, Tim, we had a very detailed discussion and debate about where to rank the S&P 500. We had it at the 15-yard marker, which is a very bullish type ranking for us. We don't put things into the end zone. We're not radicals in the market. We're moderates and conservatives in the market. And so we had a very, very, and quite frankly, most of tackle trading, the hashtag Team Tackle, the internal, coaches and whatnot, they're extremely conservative from a trading and an investing perspective. They're not going to go park, all their money in growth stocks and biotech stocks. And, they like good old fashioned value stocks and dividend paying stocks. And they focus on economics, and they don't believe in over leveraging themselves and, all of that jazz. So we're fairly conservative from a ranking perspective and a bias perspective in the market. And we had a great debate about what to do with the S&P. And, we ended up kind of keeping it at the same ranking as that very bullish indication at the 15-yard marker. And I don't know a time we've ever ranked it higher.
I mean, we might have been on the 10.
Aggressive ranking.
We might have been on the 10 one week or two at some point in the past. I can't remember. I'd have to go back and look at the
It's
data.
never been on the 5.
I'll tell you, the 15-yard marker for the entire market, Matt, is a +2 ranking. And the way that I trade, that's about as aggressive as I ever am going to get, quite frankly. And it's the market. It's where the market is.
I don't put things into +3. I personally don't do it. It's like, what's the old saying? There's old traders and bull traders, but there's 0 old bull traders.
No old bull traders. That's right.
Yeah.
Yep.
I mean, it's just because, there's a time and a place to be aggressive, and there's a time and a place to cash flow, and to cash flow, that's every place. So, it's just I know that's a long-winded way to answer your question, but when you look at Apple, when you look at Autodesk, when you look at, the home builders, when you look at, AG, Amgen, right? Take a look at biotech. Biotech and healthcare has been on absolute fire, breaking out of a high base breakout on increasing volume. We'll see where the volume is later today. But yeah, you got proper triggers, you got proper breakouts if they fit your style of trading, and absolutely you're a buyer here.
By the way, welcome out everybody. Hashtag Team Tackle. I do love that hashtag because we are a team out here. One thing I want everybody out there to do, whenever you pop into the halftime report, give us that quick thumbs up. 61, 62 people here live. I expect that number to climb as you're coming in and joining us. We love having you here. Just give us a thumbs up. Gets the word out about tackle trading and what we're doing here. Matt, there's strength across the board in the market. I'm looking at pretty much every sector, every index looking very bullish. The Dow, the S&P, the NASDAQ, and the Russell. Out of all of them, though, the NASDAQ and the Russell are a little bit more sensitive, and they are the most bullish here today. You look at that RTY, Matt, we talked about it. Breakout, pullback, pivot. When it was at 1,600 and pivoting, we're like, okay, that can scream to 1,700. Here we are at 1,662, Matt. It's been an incredibly bullish instrument since it broke out last month. Give me a read on this one.
Yeah, and it's starting to see increasing strength here, Tim. You're starting to see increasing momentum in the trend, increasing volume. I mean, even on the pullback we had a little bit on Friday when we tested the 90 MA, it responded very, very well coming out of the weekend. The volume today, midday, is extremely impressive. You're at the top end of the range here, but I want to focus on the increasing momentum very quickly. Once you break out, you see this little tiny, momentum as you're breaking out, and you only move about from 1580 to about 1635. So you only move about 55 points. But then when it comes down and retest it, you move from 1590 all the way to 1640. You're seeing increasing momentum in the trend start to develop in the Russell 2000. And there's no 100% guarantee in the market. There's no 100% guarantee in absolutely anything. But increasing momentum is an indication that the market will continue to move up. And like we talked about all last week, the week before, and the week before, the Russell 2000 can absolutely scream and be a leader in the market when it chooses to. And it's really looking like it's wanting to run here. 1,700 is not. Maybe it was a little surprising given that prediction last week, but 1,700 looks like it's going to be hit this year.
Oh, you're like 2 ATR away. I mean, literally, you think about it. You're 1664 right now. It's an 18-point ATR, Matt. 2 days, 2 strong days in the market. It could be there this week.
Yeah.
I'm not sure that it will be there this week, but
there's a lot of euphoria though around the world right now. I mean, once we really because we hadn't seen how the international markets responded to the phase 1 trade announcement on Friday, Tim. We hadn't seen how the international markets responded to the delay of the tariffs. That all happened on Friday after those markets had closed. So, the Japanese markets, the Chinese markets, the European markets, the UK markets all responded bullish. And obviously the US market opened up yesterday at 5 p.m. Eastern Standard Time in the futures market. And it continued through the carry through on the cash open. So, in looking at the S&P 500 here, Tim, it's very impressive. It just is. You got to give it a lot of credit here. But when you're looking at this from a 30-minute chart here, this is the market opened up on the overnight action. This was the retest on Friday, and then the market opened up here on Sunday. And after you saw that, there's the futures market. Here's the overnight action, and there's the cash open right here. It's been a very euphoric moment in the market over the last 12 hours or so.
Ding, 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 ding. There's no doubt about it. It's bullish. And so many of the stocks that are bullish are based on the sensitivity of the trade war, if they do business there, or even the economics here in the States, Matt. There are some interesting economic data points I do want to talk about here as we go through the markets. Some companies we'll get down to here in just a minute, Matt, but I want to start with XHB, actually, the home builders. I saw this, and I think they're probably right. I saw that they have one of their highest readings of confidence from builder confidence going into 2020, Matt. I mean, that's a very strong bullish indicator.
The report basically say that the home builders have the highest confidence in home building in the last 20 years. And if you think about the last 20 years, I mean, the 02 through 07 market was ridiculously dumb. I mean, just ridiculously dumb. I mean, zero down payments, no credit checks, stated income. And yet in that environment over the last 20 years, the home builders are more confident today than they have been. And Tim, they should be. They should be. Look where interest rates have been over the course of the last 10 years, and look where interest rates are going to be over the next 10 years. You think we're going to see a 2.5% Fed fund rate in the next 10 years?
No.
I'm dead serious. I am dead serious. Do you think in the next 10 years we will see a Fed fund rate at the U.S. above 2.5%?
10 years. 10 years of economics is a long time, but I don't think so. I think the globe has reset the way they do banking, and I believe in 2019 they've destroyed it with all of these interest rate cuts. Well, because it's not just the Fed in the U.S., Matt. What happened last week? We had economic, data point after data point, and those Fed governors, they're all lowering rates or they're coming out dovish. What are you going to do if you're the Fed? Why would you raise rates when nobody else is raising them?
Well, think about it. We're 2 weeks away from the end of the decade. Think about that for a second. We're 2 weeks away from the end of the decade. And if you track the last 40 years of interest rates, and I've said this before on the pod, I've said it before here as well, but it does bear mind repeating. In the 1980s, the highest interest rate was about 24% at the Fed fund. In the 1990s, the highest rate was 6.5%. In the 2000s, it was 5.5%. In the 2010s, it was 2.5%. At no point in the last 4 decades have we exceeded the interest rate on the high end in the following decade. Yeah. So I asked the question at 2.5% for a reason, and you kind of laughed because it was funny, but I'm not. If you gunned ahead and said, Matt, you got to pick one. 10 years from now, are we ever going to exceed 2.5% at the Fed fund? Not unless we get a Volcker back.
Yeah. It would require a much different leadership, a much different tone at the Fed.
With where the interest rates have been in the past, where the expectation of interest rates, cheap money environment, monetary theory environment in the future, why wouldn't the home builders be extremely euphoric? And when you break down not only these, I mean, the home builders have been on fire here to date, no doubt about it, forming a really good consolidation. I'm seeing this in a lot of the home building stocks, real good consolidation here. Obviously, the breakout on the entire home builders is absolutely tradable here. But when you look at some of the leadership in the home builders, D.H. Horton, wonderful trend. When you look at the fundamentals behind some of these companies, Tim, take D.H. Horton, look at earnings per share. 146, 203, 236, 274, 409, 429 on the current. 6 years in a row, they've exceeded earnings per shares, increasing dividend per share every year over the last 6 years, increasing dividend per share. And despite the fact that they've been on fire technically with price going up, still has a P ratio at 12.63. You take a look at Toll Brothers, Tackle 25 stock Toll Brothers, and we're going to have a fascinating, why can't you find that symbol?
One L, not two.
Oh yeah, my bad. We're going to have a fascinating conversation over what stock to add in the Tackle 25 for 2020. Which one of these home builders? There's 4 of them that are kind of in the leadership: KB Homes, Toll Brothers, DH Horton, and they're all really, really fundamentally sound, really, really technically sound. So again, when you kind of bring it down from a technical perspective, they're all looking fairly similar. Look at earnings per share numbers here: 184, 197, 218, 317, 485. Really good expansion. What environment, outside of a massive recession, Tim, which would impact every industry in every sector, maybe not name utilities, staples, and real estate, but outside of a massive recession, why wouldn't the home builders be extremely euphoric, and why wouldn't they have the greatest confidence as a home building company over the last 20 years? It makes complete sense.
Yeah. Consumer confidence is high. Unemployment is very low. The economy is hitting on all those types of cylinders. And so I'm sure they're seeing a lot of pre-order demand and all that kind of stuff. It's a very telling thing. Yeah.
One last thing. You got a lot of baby boomers retiring here. And you got a tremendous amount of that. The highest population generation in American history is not baby boomers any longer. It is the millennial generation. And the millennial generation is really getting into that age group where they're buying their first home. So it's again, we could go on and discuss this for another 20 minutes, but the simple reality is if I owned a home building company, I would have great confidence right now too. It's like Saudi Arabia with oil. Listen, the Fed's got the home builders' backs.
By the way, my 2 cents, I think that Toll Brothers probably is the strongest for me. I love the dividend. I love the fundamentals. I love the chart over the last little bit. And the way that I personally trade it, I like to own those shares actually, Matt, and covered call it. So that neutral, I have no problem with that at all. It's stable. It's what I'm looking for.
I think if you want more cash flow from a covered call dividend, it's Toll Brothers. If you want more growth plus cash flow, it's DH Horn. But those two are the leadership, in my opinion, in this space.
Yeah. Crude oil is pressing $60 a barrel. Let's look at all the commodities here. Start with the biggest one in the world. Crude light, Matt, 60.17. That is not a confirmed breakout, and there is no volume or momentum. No thank you for a bullish trade in my estimation here today, Matt.
Not yet. You would want to see volume pick up here. I just have a sneaky feeling it's going to hit that trend line and come right back down.
That's what it feels like. Or even just kind of drift up here and then have one big 3 or 4% down day that brings it all the way back into the range, something like that. It's fine for bull puts. I still have a bull put on. I still think you can cash flow it. You can cash flow it for all year long, but I would not trigger directionally here today.
I said last week that a trigger above 60 is absolutely tradable, and it is. But that trend line to me just gives me a little hesitation. The lack of volume kind of confirms that hesitation for me.
Yeah, I'm with you. Natural gas is rallying, another green candle. You have now filled that gap point. And, there was a long discussion about this one with me, you, and Frank about where to put it. And, there's mixed technicals here, Matt, don't you think?
Oh, absolutely. There's mixed technicals here. Right? My entire analysis starts with 2.2, though. That's where my entire analysis starts. As long as 2.2 here holds, you can cash flow on it. As long as 2.2, if 2.2 is broken, you can't cash flow on this instrument anymore. That's how strong I believe 2.2 is. Market responding here today. You said it was cold overnight, Tim. It snowed a little bit in Utah, and obviously natural gas is up because it snowed in Utah.
Sure did. Cold weather, it's obviously creating some demand. That's a joke we have here all the time, but it is something that they do watch for, obviously, is weather patterns, stuff like that. Nice green candle today if you are on the bullish side like I have been with a bull put all the way down at 2. Well, you like this action, Matt. Do I take this thing off at some point?
I feel like I have to talk you off the ledge on natural gas constantly, and you've been cash flowing on it now for 3 straight months. It depends on net liquidation, I would say, T.
Well, you ever run into a situation like this? I'll give you the scenario.
Okay, give me some numbers.
Okay. Here's the basic scenario. I've been writing my trading plan out, which was to stay in as long as it was above 2.2. Okay. And it's been above 2.2, even on that gap down, backfilled, the whole thing. So by the skin of my teeth, I've just stayed with my trading plan. I'm now back to a break even with commissions where I could exit a trade that I've been in since the beginning of November. Okay. It was about a 40-day contract trade.
Yeah,
I've only got like 10 days. I've only got like 10 days left, Matt. And I'm like, I can take this off.
To give it a little bit of context here, you were getting blasted on that gap down.
Oh, yeah. No. Destroyed. Yeah. For sure.
You were getting blasted on that gap down. Mm-hmm. So, because in a credit trade, you receive the credit, but that doesn't mean you can't lose money, right?
No,
and in the futures market, in a highly leveraged environment, that gap down comes down, and all of a sudden you're getting just blown out of the water, and you're losing $5 for every $1 you're cash flowing at that point.
Oh no, it would have been the drawdown, yeah, for sure.
Yeah, it would have been the drawdown. So, that gives it a little context that it's kind of like you're down 20 points, right? Okay, no, it's kind of like my fantasy team yesterday. I was in the playoffs in one of our leagues we play, and we only start 8 players, Tim, right? We don't start defenses, don't start kickers. We just start 8 players. And I put up $170. I mean, just absolutely destroying things. Everybody was doing great. And it came down to the wire. And I was up like 150 at one point to like 60, okay, in the second day of the action. And I was like, yeah, that's a win, right? That's a win. And then all of a sudden, just inching away. And it came back and I lost 170 to 171 in just epic fashion. And so I kind of feel like you were the dude I was playing, and he fought back to break even. And now you got a winning trade and you can pull it off at this point and you can declare victory. Another analogy I'd give is how we left Vietnam. We just left and declared victory. You can just leave this trade right now and declare victory. You got mixed signals on the technicals. You fought back from being down pretty big. And now you can pull it off and reassess it at a better situation. That's the debate you're having internally in your head, right?
Yeah, for sure.
That's the debate you're having internally. I want to ask one simple question. When you put the trade on, the market was in a different trend than it is today.
Correct.
Okay. And you had, I believe, a 95% probability of successfully cash flowing on it at that point, correct?
No, it might even been higher than that, but yeah.
Might even been higher. Might have been 3 delta,
yeah.
3, 5 delta, something like that.
Yep.
So the technicals are different. The probability scale is different, and you can declare victory by just leaving Vietnam, even if it felt bad. I'd probably do it.
Oh, that's the debate right now. I haven't done anything with it yet.
You got to get credit on the analogies, everybody.
I do like the analogies. Out of all of them, though, your fantasy football team, I like the Vietnam analogy a little bit more. I'll just say it like that.
I just wanted to let everybody know how
you just wanted to complain.
I just wanted. That's it. I was looking for an angle where I could just complain about this epic loss I had yesterday, and I used your natural gas debacle as an opportunity.
Well, now that's the part of it. It's not really a debacle right now. If I do declare victory Vietnamese.
Exactly. Yeah. Again, I chose the word debacle for a reason. I knew it would trigger you. So I know it's a tough conversation, but if you're back to break even and the entire reason you put the trade on is now different from both a trend and a probability scale, I think you got to at least pull some of the contracts.
By the way, just kind of do a soft pitch for the podcast here by bringing up UNG. I want to explain something right now, because where we're going here, there's different mindsets to it, Matt. With NG, I'm trading a spread in my trading account for cash flow. So my mechanics are different. With UNG in my retirement account, I actually have naked puts, and I'm willing to take ownership because I have wanted to build some position into this for some time. So I'm treating these things different. If I have to get assigned –
I'll just tell you, when I look at UNG, I hate your trade. When I look at /NG, I'm like, okay, I get it.
I get it. But I've just wanted to buy UNG all year, And so I sold naked puts at where I would feel comfortable owning it. I've got the 17 strike right there, Matt. I sold them before it broke support, by the way. But I'm like,
you probably sold them back here.
Yep, and it's a boomerang trade. So I'm like, okay, if I have to buy it at 17, say la vie, I'll turn it into cover calls for 2020, right? But with NG, it's a different animal. And in your trading account, and when you're trading spreads, and especially if you're trading options on futures, Matt, you have to have different mechanics for this stuff.
You're willing to take possession on the ETF. You're not willing to get delivered, physical natural gas to your home tomorrow, right? Mm-hmm. And I say that jokingly. Obviously, they don't deliver a 55-gallon barrel of oil if you sell a naked put on, /CL. It's cash settled. But at the end of the day, you got to treat them differently.
Yeah.
Because of leverage and because of, taking ownership. Boomerang trade on UNG, credit spreads on NG. It's the same thing with USO, Tim. Boomerang trades on USO and credit trades on /CL. It's the exact same thing.
It's where I love ETFs, that you can use in your retirement account. It's such a wonderful product. There's no question about it. Well, we will continue to look at this, and you'll continue to, get me to try to make a decision at some point. Right now, I'm sitting pat, Matt. I probably won't do anything today.
Any contracts? No contracts? None?
I mean, I've been riding the trading plan for 4.5, 5 weeks. It's like,
all right.
I don't know.
I'll talk you off the ledge next time it hits 2.2.
You might have to. Oh, gold neutral, silver neutral, platinum pulling back, copper showing strength, Matt. But we got to take a peek at gold chart real quick, and then palladium. Not much analysis on gold. You can go right through it. The same thing we've been saying for a month and a half, don't you think?
I go watch any halftime report for the last 2 months. We're good.
Yep. But palladium, same thing we've been saying now for a year and a half. This thing is incredible.
It's just disgusting. I'm sorry. It's just disgusting. You can't give me even a kiss off the 9. You can't do that.
I mean, literally, every time I bring this up, I just feel like I'm just losing money because it's like, it doesn't want to stop.
It's so good.
It just doesn't want to stop. But you know what? Quite frankly, I think most of us, if not all of us, have missed out on this palladium, even though we were analyzing it.
You know, I played it a little bit. I don't own any of it right now. I completely missed this move. You know, it's hard when you're a technician and you see these blow off tops. You can respect the strength, but you tell me you're going to buy right there at 1958. You know,
there's no technical trigger there. Are you kidding me?
There's no way.
Like you could bar by bar it, but I mean that's just. You're trying to ride. What was the thing where if you're going to chase the dragon, ride the lightning?
Yeah, if you're going to chase the dragon, ride the lightning. Go get it. Yeah. Go get some. There's no doubt about it.
Go get it. Go get it.
U.S. dollar dojing today on all this news with the international tariffs and trade war stuff, Matt. I don't see.
Doji at resistance isn't good though, bro.
It's not good.
Doji at resistance is not good.
Kind of.
Go ahead.
I was just going to say it's kind of flat here today, but I got this sneaky feeling about bearishness on the dollar. We started moving it to that side of the 50 in our rankings.
What sneaky feeling? It M formation, broke support, then got destroyed based on the Fed last week, and then completely violated 97 before you snapback rallied into 97. Is that sneaky feeling based on just pure technical analysis? Is that the feeling?
Yeah, like all the information being presented to me for sure.
Is that the information?
It's very sneaky, very sneaky. It's very sneaky here. Don't you? I mean, I'm seeing that. I'm not seeing a lot of stuff on the economic calendar either. If there was ever a week to do some Forex swing trading, you could even convince yourself in a few different positions here this week.
This trend line that I'm going to draw has been hotly debated in the Scouting Report meeting for months and months and months and months and months. And the very reason Cody Mackey has a carry trade on the dollar.
Yep. But yeah, I am getting nervous on that.
But support broke and the trend line broke.
No, yeah. I'm sitting there, I'm seeing that doji and I'm just like, get back above that 50. If it doesn't, then I'm out. And
quite frankly, it keeps getting better for the UK, right? From a news perspective. You're starting to see price appreciation come into the New Zealand dollar. You're starting to see it come into the Australian dollar. The euro is just going to do whatever opposite the dollar is doing. I mean, there's nothing pro-euro here. But when you're seeing a little bit of decent economic news, especially from a phase one trade deal, guys, especially from that. Australia, New Zealand does a tremendous amount of trade with China. Their currency has been impacted. Their economy has been impacted tremendously based on that the last 19 months of these trade deals. I mean, here in the U.S., we have not really seen how that impacts us, right? From a everyday American consumer perspective, it really hasn't impacted us economically. It really hasn't impacted us from a trade perspective. And so we haven't seen how it's impacted other economies from around the world. And that the trade war between the U.S. and China, and it's still ongoing, but phase one is legit here so far. That's going to have a big bump to Australia and New Zealand. And you're starting to see those currencies appreciate, especially the New Zealand dollar. So obviously, and plus with Brexit last week and the positive news coming out of Boris Johnson and, the conservative leadership over there in the UK Parliament. And so with that, you're going to have a little bit of, depressed price action on the dollar. We downgraded the dollar coming into this week, both from an economic, a fundamental, and a technical perspective. Not a big downgrade, but into the slightly bearish category. If 97 doesn't hold here and create a truly neutral environment, 96 is not that far out of the way.
I just don't know what currency I can confidently buy, even if I want to short the dollar. I know the pound has been having a lot of incredible news, Matt, but it's parabolic up. I went through all the currency pairs you're talking, and I understand it. I see it. And that trend line broke and support broke, Cody. I mean, that is happening on the chart. Maybe the CAD, Matt. I mean, the dollar CAD cross pair looks like a good trigger there as well.
No.
I don't know, man. I don't know where I would see a tradable instrument even off that dollar weakness.
The dollar against the Japanese yen actually did have a nice bullish retracement.
But that's buying the dollar.
That's buying the dollar, yeah. So it's weird that it did that nice.
It's because the yen is a rag currency right now, and they've been killing it. So I don't know.
They've been killing it for 40 years. So,
but no, the best trades have actually been
or 30 years.
the Australian dollar being
the Aussie and the New Zealand dollar's been moving. The pound. Let's see how that gap is impacted on the pound.
Sure.
But I don't see a great swing trade here on the dollar. I see better. I still see the dollar as a day trading vehicle. That's
day trading or position trading, kind of where I'm at as well. Bitcoin just kind of hanging out around 7,000 a coin. It's been there for about 2-3 weeks. Not much else to see there. We've been talking about that one very little because the volatility of that product this year, Matt, has been incredible. It goes flat and does nothing for a month, and then it will go like 30% in like 2 days. You know,
well, that's what the people's currency does. I mean, that's what it does. It'll flatline, then it will die.
Yeah. It's not exactly behaving like the people's currency lately, nor getting past that way.
Oh, you think I say that with great confidence?
No.
There's some sarcasm there, buddy.
For sure. No, I picked up on it. Companies I do want to talk about here today, Boeing, Matt, one negative news story, for their stock
I got to
price.
say something about Bitcoin real quick.
Sure.
Did you see the report that there were NFL players asking in contract language to get paid in Bitcoin?
No.
It's so funny. So funny.
I hope that was made up. I saw it and just said,
I hope it was too. I hope it was
made up because really, you don't
what
know
are we doing, guys?
It's like take half your money you're being paid in and go buy Bitcoin. Like what?
Yeah, what are we doing? Like the NFL, these rich billionaires are going to, just start paying it in the people's currency.
Sure. And the IRS is not going to find a $20 million quarterback who's going to owe his taxes at some point. Could it be a tax thing, Matt?
You don't think we can hide taxes in Bitcoin? Oh, that's also what the people said, that we could hide taxes in Bitcoin. Okay.
No, did not work out that way. In fact, they continue to go after and try to settle some of those suits, actually, Matt. They keep going after people for their back taxes on it. Let's talk stocks here today, Matt.
So it's not anonymous?
No.
Oh, it's not. Okay. And it's not a fixed supply anymore, right?
Well, they're going to continue to expand the supply, Matt.
Okay. They're going to, so okay.
Both the benefits of it are gone.
Yeah. Okay.
Let's talk Boeing. Boeing has a board meeting, Matt. I think
all
today,
be fired.
tomorrow.
Let me say this. Every time you bring up Boeing, I'm going to say the same thing. They should all be fired.
Wasn't that the board's job, right?
Fire the board, fire everybody, start over, get rid of anybody that had any inkling of there was a problem with planes going down. Get rid of them all.
What if the board came out and fired management and said, listen, we are not putting that plane out there again. We are going to reestablish because they're talking about a vote, Matt, pulling the 737 MAX out of production, which I actually don't think, it would have been that hard to kind of map that out in your head. Obviously, they thought they were going to be able to get through this year. Eventually, people would forget about the news story.
They have missed every single deadline they have put out.
It's
every single one. Every single one.
Yeah.
So, it's down to, what is it, down 4% on the day. You're kissing support at 330, 325. If support is violated, 300, 275 is not out of the equation here, Tim. Deeply, deeply concerning and negative news for Boeing. And this is a complete and utter stay away from the buy side. That doesn't mean you can't short it.
Yeah, I think a short below, even for like next year, Matt, let's say they do pull that plane out of production. They've got this negative public image and their sales are down. I could see downtrend here. I mean, let's not assume that Boeing has to go up all the time just because it's got a dividend. It's a long-term company.
It's very news driven right now, though,
it's
too.
It's a stay away from me. But if somebody told me they were going to short for like next year. Okay,
if that's the kicker, though, it's the time frame.
Yep.
Okay. If somebody said they were going to short for the next week, I'd be like, it's news driven, right? It's just so news driven. But if somebody said, you know what, I do not believe in this company. I believe there's a lot of fire around that smoke, and I think it's going to come out even more negatively, and I'm going to take a short for the next year. I'd be like, all right, just keep position size according to your own trading plan, keep it tight, and let it roll.
It's a stay away for me. I think there is some logic behind what we just described, but it's a stay away for me. DuPont went into a merger with IFFDD. This company's been spinning itself out into different ways now for a year, Matt. You remember they spun out Dow Chemical from the original DuPont one. This one now, they're getting rid of a portion of their company, and they're going to kind of focus on their core business. Yeah. Interesting. Not a tradable chart. at all.
It's a short under 64.
Yeah, there's nothing there. Upgrades on the bull side, some really, really strong stocks in the semiconductor space. WDC and Micron were both upgraded at Cisco.
The Western Digital, huh?
Yeah, Western Digital upgrade into chip makers. Micron upgrade.
I don't know why you would upgrade them, but
well, you know how analysts are. It's probably who they got coverage on.
No, well, they see so much strength going into semis, and they see, okay, we haven't upgraded Western Digital in the last 7 years for a reason. But let's give Western Digital a random upgrade and see it fly for a day. The one that's in, I mean, when you're looking at this chip space right now, looking at the semiconductor index, I mean, Tim, it's just really, really, really strong. And obviously the semis, is there another industry that has more, impact on with those U.S.-Chinese discussions than the semiconductor index?
I mean, maybe tech if you include all the products that Apple ships and whatnot. But no, I don't think so. I mean, semiconductors, well, maybe
within the entire tech space, then semiconductors. Yeah, I think they probably have the most impact based on those discussions.
Maybe casinos. Casinos are always flying, but that's a specialty type of thing. I mean, that Macau thing.
The Wynn Resorts of the world, obviously, with the news, they started flying. Las Vegas Sands, who doesn't have as much impact with that, with Macau and whatnot, but Las Vegas Sands kind of exploded on that news as well. So, yeah, I could see the casinos. I could see the semiconductors, tech, industrial good type companies as well. Yeah. Finance.
Well, and what you did there, Matt, I brought up Micron and WDC, and instantly your brain goes to AMD, which is exactly what mine did this morning as well, because I don't trade WDC right now or Micron. I'm trading AMD and AMAT.
I trade AMD and AMAT.
So news in some spaces, sometimes it's going to trigger the volatility and the momentum on the stocks that you're focused on, and that's why you got to understand kind of how all this stuff fits together. AMAT and AMD are both looking really, really good. The whole chip makers, they've been strong this quarter. There's no question about it. This whole year, actually. Isn't AMAT the top performer on the Tackle 25 this year? I believe
Applied Materials, off the top of my head, I believe it's Applied Materials and then Apple.
Yep. Other companies, Goldman Sachs had an upgrade out of Citigroup. The financials have played a little bit of comeback here.
It's always kind of cute though when another bank upgrades another bank. That's always so cute. so cute.
Oh, Goldman. Goldman hasn't felt your fire in a long time. Are you getting soft on this company?
No, I think my anger was taken over by Tesla.
Sure.
And Deutsche Bank.
Yeah. There's only so much capacity. That's
and
right.
Boeing.
That's right.
Right. You only have so much.
And
who else? Bitcoin.
PCG.
Bitcoin. Oh, PCG. So with PCG, Boeing, Bitcoin, Tesla, I mean, you only have so much hate to give, Tim.
Yep.
You do.
Well,
so
I'll tell
Goldman.
You.
Plus, I haven't seen Goldman do anything that crazy in the last few years.
No, I think the company is actually well performed.
Their leadership has been better in this cycle than the previous one.
I've been much, much more happy with them. They used to be my number one ranked company probably 5, 7, 8 years ago, Matt. There's no question. I actually kind of like what they're doing lately. That's a breakout.
I still wouldn't buy them.
I don't know, man. I could not fault somebody if they did. I don't like chasing.
I would call them a bad person, but for giving the devil the money. But, no, it's not like buying Deutsche Bank. I mean, it's better than that. So Deutsche Bank is my number one hated bank in the world by far, outside the central banks. But Goldman Sachs, that's clean breakout. Let me give you a pick. Okay, just two choices. You have the Goldman Sachs breakout.
Okay.
And I'll give you Jamie Dimon and JP Morgan.
Oh,
free trade, you're carrying it till Friday.
I got to pick out of these two. I can't pick PayPal.
You cannot pick PayPal.
I mean, PayPal was on our option report bulls.
That's credit card company. JP Morgan's on our pick too.
Yeah. Out of those two, I think I would take JP Morgan. I don't like chasing upgrades for swing trades. Usually the upgrade downgrade is a 1 day. If you look at the intraday on Goldman Sachs, a lot of times that will come back and test that 9 EMA, something like that. So I would probably take JP Morgan just because in my history, 15 years, Matt, playing the day of the upgrade or the downgrade has not been that profitable for me. So I kind of just don't play it that way.
I think you can prep the JP Morgan trade a little easier than the Goldman Sachs trade at this point.
Yep.
And you'd have to interday with the JP Morgan trade, but I do see a cleaner trigger at this point. I see a cleaner stop loss at this point, and then you would manage to trade bar by bar. Obviously a 150 target would be out there in your mind, knowing full well that it might take 2 weeks to get there, but you would have to momentum trade JP Morgan, but I'd take the JP Morgan trade too.
Yeah.
Over Goldman.
We were mentioning companies you hate, and I did mention PCG for a reason. They actually got rejected from the governor in California on their bankruptcy plan. Matt, stock gap down. I don't really
Gavin Newsom didn't want any of PCG's bullshit, huh?
Didn't want it. And I don't blame him. Thank God there's a politician that will stand up and fight these guys that way. I don't care what the technicals say. I'm not touching this one. For me, it's a complete stay away.
This has been a stay away for 19 months.
It's amazing to me, though. At least once a month, though, I'll get a question from a student. Hey, Tim, what do you think about PCG? Should I buy it? For some reason, I don't know if it's just in the news all the time.
No, it's not that. It's bottom picking. It's in our DNA, Tim, and it's in every one of our DNA. It's not just that student or another student or you or me or Cody or anybody else. All of us would rather pay cheaper prices, Tim. Mm-hmm. Every single person in human history would always rather pay a cheaper price when you're a buyer. And as a seller, you would always rather receive a higher price. As a seller, that is just ingrained in our capitalist DNA. We buy low, sell high, right? And so, when you look at some of these companies historically and you say, okay, is PCG a buy? You're starting to see some rounding bottoms and some technicals that could support that equation. But this is a company that has been mismanaged now for 3 consecutive years. 3 consecutive years. It's a company that without public money would be bankrupt, would be
Correct.
Absolutely bankrupt without public money. And so do we really want to invest in a company that is prone from a political discussion point that they need public money, taxable money from Californians to run this publicly traded company? And the answer to that should always be a resounding no. Should always be a resounding no. It doesn't mean that other companies don't accept public money as well, but it doesn't. But the difference here is this company would be bankrupt without public money. So if I was Gavin Newsom and I'm running California and I'm looking at this company and I'm saying, look at the damage you have caused. Look at the economic damage you have caused. Look at the damage to people. I mean, this was a company that literally would just shut off, utilities to people randomly. And I'm Gavin Newsom, and I guarantee, I haven't seen the bankruptcy documents, but I guarantee they're pro PCG. I guarantee they are. The expectation that they were only going to pay this big of a fine, well, come on now. So yeah, I support it as well. But to answer the question, no, this is a garbage company, and I'd rather buy Apple.
I'd stay away from it all day long. Other companies in the news.
Tim, that doesn't. One last point on that. That doesn't mean there aren't legit strategies of bottom feeding.
Sure.
Right. There's the theory and philosophy of the dogs of the Dow, or take Lyft, for example. Right. We were all over this one for the last 2 weeks, looking at the rounding bottom, the inverted head and shoulders formation, the confirmation on the breakout of 45, the retest of that's legit. Right. But you can also see a path to profitability for Lyft. PCG is going to need to be bailed out by Californians for the next 20 years.
Well, and even if it does have that path to where it's still in business the way that it is, Matt, it doesn't mean it's going to make any money. The stock price
Stop selling off Lyft.
Yeah. Yeah. Uber, by the way, one of the reasons why Lyft is up today is that Uber is up today as well. And those two seem to trade like 2 peas in a pod, Matt. They're selling a division of their company, Uber Eats India, I guess not the one in the US, but they're looking to unload that and get rid of it. I actually think it's good news for the company because if they're focused on what their core business is, they don't need to be delivering everything on the planet. One of the risks I think this company and also Lyft have.
Have you ever driven in India?
Yeah, I have never been. Never.
Yeah, I have. Yeah. Uber Eats would not work in India. It's a good decision.
Yeah. Well, not only that,
I'm going to push back on Uber Eats.
I don't think they make money on Uber Eats. They lose tons of money.
Wait. Uber doesn't make money on anything.
I know, but they lose a lot of money on that.
Hold on. So let's not start with the analysis on Uber Eats is terrible because they lose money on it. Uber loses money on everything, literally everything. So I think Uber Eats can be you know, in the US and Europe and other areas, I think Uber Eats can absolutely, it's the gig economy. It's the give it to me now economy. And who's in a better position to deliver that if the consumers demand it than Uber and Lyft?
I've used it. I'm emotional about this one. There's no question about it.
You just don't like it.
No. They screwed me over when I was in New York City and I was trying to order food from Uber Eats twice.
Why are you ordering Uber Eats in New York City? What's wrong with you?
Listen, I was watching the Bears
game. Walk out the door and there's a million places. Uber Eats in Salt Lake City is legit.
Yeah, no, I've used the service quite often. I just don't, I'd have to look at the numbers on it, obviously. I thought it was a good news story for them to get rid of a division that I didn't.
I'm just saying, I don't understand how anybody can drive in India. So yeah, it's a wonderful decision to sell that off.
Tesla, by the way, we keep talking about the stock. We might have, could have led with this stock, by the way.
On fire.
Unbelievable, Matt. I mean, that's a blowout top right there. We're up almost 7% on the day here. And I got to tell you, I went to look up the news. There's no news. There's no real news on Tesla as to why it's running up here. It's got to be short covering at that pivot point, at that resistance when it broke out. Now we might actually get to 420 here, Matt, in 2020. This is an incredible stock right now. What's your read?
I think most of the last 3, 4, 5 months has been short covering in Tesla.
Probably.
The numbers have not been the numbers on the earnings this previous quarter was not bad. Obviously, they broke out of resistance, started flying above that. But after that, positive earnings news, and I don't say that as a negative on short covering, Tim. The shorts cover when they start to lose money and they start to see their plans fall apart. And I've said this about Elon over the last 14 months, 15 months, ever since he did his little manipulation deal in August of 2018. I said, this is how you beat the shorts. You don't manipulate them. You don't manipulate your stock. You build a successful company and you make them lose money.
Yep.
That's how you beat the shorts.
Yep.
And then the shorts will capitulate. And all of a sudden you say, I'm done losing money on Tesla. Let me go put my hate somewhere else. And Apple right now has, I don't know what Apple's short rate is, but I'm willing to bet it's around 1.5%.
I would guess 1% or less. Yeah.
Yeah, it's usually around 1%. Same thing with Microsoft, same thing with Disney, same thing with these juggernaut companies. But that wasn't always the case, Tim.
Right.
It wasn't always the case that Apple had 1% short rate back in the 90s and early 2000s.
Apple's 1.4%, Tesla's 20. That might seem extreme, guys, but I remember when
it was 29 a year ago.
Yeah.
It was 29 a year ago.
That's right.
And that's the shorts covering here. Right? You're starting to see that short interest rate and that short float come down because they're like, all right, I fought a public battle against Elon. Elon, you won. Fine. Let me go fight somewhere else. Right. And so that's how you beat the shorts and give Elon some credit. Give him some credit here.
Yeah.
I still don't like the fact that he manipulated, but if he's going to win the battle against the shorts, Tesla's going to price appreciate.
I agree. 2 stocks on the bear list today that are showing me weakness: Beyond Meat and GE. Not surprising. Let's take a look at the BYND stock here, Matt. It's obviously fallen out of favor. We talked about it for a year. There are lessons.
It's so hard to short, though.
Simple lessons. Oh, I wouldn't short it.
No, it's hard to borrow.
Yeah,
that's what I meant. And the volatility on the options are so extreme that it's hard to even get into a trade on the short. I've been wanting to put this stock on the options report for literally on the short side for about what? 3-4 months.
It's been bearish for sure.
And every time we come into it, the implied volatility and what you have to pay to get into a trade, it's just absolutely ridiculous. It's very, very tough to trade here. That doesn't mean that a violation of $72 that could get ugly for Beyond Meat.
Yeah, it's a low base and definitely in a downtrend. And really, I do think it will retest that IPO price down there at 45, Matt. I do believe that. So I'm seeing some downside. But the problem is it's such a volatile company. Being a short position, I would have to play put options or specialty spreads.
And they're going to make you pay to get into the put options.
That's right. That's right. Another company, GE, is down just a hair here today. It just always makes me happy when I see a sea of green and GE is down just a sliver. It's still a high base and it still might be a breakout. I just wanted to point it out. Makes me feel good, Matt. And there are 8 triggers on the reports, but I want you to do a quick analysis on our sectors. We do it every Monday. And then we'll kind of pitch our, community and talk about it, and then we'll wrap up the show. But Matt, Mondays is like preparing for the whole week. And we've done this over the weekend, by the way. We did our scouting report meeting on Friday, and then the reports come out on Saturday. And a lot of our students are going to watch those Saturday or Sunday or even Monday morning. And one of the first ones I recommend anybody start with is the newsletter, because it's that top-down analysis, that big picture view of what is happening with the market. And we did a ranking of the sectors. Give the team out there a quick update.
Yeah, just a couple upgrades, downgrades, and nothing big this week, Tim. I mean, most we felt like they were properly ranked last week. I felt like, I wasn't in the meeting 2 weeks ago, so I kind of felt like we were a little over aggressive on healthcare. We downgraded healthcare just to come in line with some of the other, best sectors out there. So don't take the downgrade in healthcare too radically. We downgraded it more just to move it in line with some of the other very aggressive sectors out there, like financial. Oh my God, very aggressive financial and healthcare. There we go. Technology, communication. So a couple downgrades. Healthcare was just kind of to bring it in line with the market itself. Technology got a slight upgrade into the 10-yard marker. Communications got a slight downgrade, just was not, performing as well with the market. Industrials has not really kind of, picked up to the level that we kind of thought. We downgraded that just slightly into the positive, slightly bullish territory at 25. Real estate got downgraded into the left of center type negative rating. Real estate and XLU, they're just not going to perform very good in a very euphoric environment to the same degree that those aggressive sectors are going to be. Let's take a look at these from a technical perspective very quickly, and I'm going to start with those aggressive sectors. I'm getting very interested in basic materials here, Tim, forming a little bit of a flag type pennant pattern here at 61 with a trigger above 61.24. Keep an eye on how basic materials performs around that $61 handle. It did break out of that 52-week high at 66 just last week, so let's keep an eye on how that performs. Got a slightly bullish ranking on that one. Communications here. We just downgraded a little bit because it didn't break out with the rest of the market. Trying its damnedest today to break out. Looking at that breakout channel right there at about 53, it tested above that at 53.15. One concerning thing about communication sector, the volume here just has not been supportive of what's been going on in the market, and that's one of the reasons that it did not get an upgrade with the rest of the sectors out there. One of the worst performing sectors year to date is the energy sector here, showing a little bit of price appreciation, really kind of testing that breakout channel right there at about 61.50. We're neutral on that as long as that holds between 61.50 and really kind of this double bottom right there at 58. Got convoluted moving averages because that's what happens in neutrality. Let's see some degree of trend really develop with the breakout retracement type scenario before we get aggressive in the energy space. Industrials here got a little bit of a downgrade as well. I thought industrials would maybe not fly like, not communications, but, tech and some of the other spaces. But industrials has been held back a little bit because of the trade news as well. Thought it would perform a little better when the news came out on Friday. It didn't break out of that 82.65 handle, so we downgraded it a little bit. Still in the slightly bullish situation, but nothing aggressive in this space, in my opinion, until we break out and start performing with the market. Tech here is just ridiculously strong, and it's been ridiculously strong for a while now. One of our highest rated sectors out there is technology. Technology gapped out on the strength of Apple and the semiconductors today. And that's what we're seeing, tech breaking out. It's a little bit of overextended chase the dragon scenarios here, but there are a lot of good stocks in this space right now that are triggering. Some of those are on the stock and the options report as well. A lot of momentum in technology. This is a sector that I've been waiting to break out and run for a while. We saw that break out a couple weeks ago, and now we high base scenario. The 9 EMA catches up to it. That's that nice little blue line right here is the 9 EMA. That 9 9 a.m. EMA catches up, and now you're breaking out. Look at this space this week. A confirmed breakout above 63. There's going to be some stocks in that are doing the exact same thing. So keep an eye on consumer staples this week. Your next aggressive sector here, we're looking at discretionary. Discretionary has just been kind of low for the, boring for the last 6 months, Tim. You're getting good price appreciation today on discretionary. But if I'm looking at staples, consumer staples versus consumer discretionary right now, it takes me about 2 seconds before I say staples. Right? It's a more conservative play. It's less retail in that, more companies that we have to spend money on, and it's performing technically much better. So I'm looking at consumer staples over the consumer discretionary space right now. Healthcare here, one of the most aggressive sectors in the marketplace. This trend has been riding the 9 EMA for literally 2.5 straight months. And I'm not going to, I'm not going to be the guy that says the momentum's going to stop, Tim. Your UNH trade has been just a rock star so far, and that this space just continues to pick up momentum. And that's why I said today, don't take the downgrade in healthcare as something that, more than it is. We just downgraded it to come into the same degree of space as technology, because we really had the same type of belief system on both healthcare and technology, and we don't park things into have I said that before? We don't park things into the radical zones.
We don't want to be that radical ranker. Yeah. There's no question about it.
On the end zone. That's the most radical we get.
The 10-yard line to me is still a very, very aggressive ranking. There's
it's
question.
Extremely bullish.
It's a very bullish ranking, and healthcare has been a juggernaut. Matt, you talked about UNH and AMGN and all these other ones. That space, when you look at a heat map today, it is very bright green. It's running. It's one of the strongest sectors right now. There's no question.
Oh, absolutely. 100%. Those biotech companies and those healthcare providers, I mean, they have just been absolutely on fire. Looking at the last two here, we got utilities. Utilities showing a little strength here today. Little surprising given the fact that the market's kind of euphoric here today. Utilities kind of breaking out at 63.5, reclaiming all of those moving averages. Based on what we saw here last week, really didn't see a lot of price action in utilities, kept the same ranking. I believe it's right there at the 40-yard marker. That would be upgraded based on what we're seeing today in this space, maybe into the 40 or 35 type area. So I was a little surprised we broke out in utilities today, given the strength in the market. But the market's going to do what the market's going to do, and we just got to read it. Real estate also up just a hair today, but showing pretty, not tremendous weakness, but showing some real weakness over the course of the last month and a half in comparison to what we're seeing in other spaces of the market.
Love the analysis. And by the way, you can get the full video and everything we do in the newsletter each and every weekend. Go and check that out. I would start right there each and every time. And then obviously in the halftime report on Mondays, we break that down. Marquise does a really good job. That young man is really developing into his own kind of voice there. And I feel like they're getting better and better all the time, Matt. The options report and the stock report, by the way, this week, we just have a bunch of stuff triggering today. If you're a pro member of Tackle Trading, I would go check those out immediately and start building your watch list. I think if you're a veteran, you probably already do that each weekend, obviously, Matt. But there's a lot of times on a Monday morning, if you weren't prepared and you didn't check it out, you might have missed that trigger on that very first day. There's a few stocks going on that way today, right?
Oh, it's what we saw last week too, Tim. I mean, a lot of high bases in the stock and the options report from last week didn't trigger, but they triggered towards the later end of the week. You got to those scouting reports, guys. Those are watch list. Mm-hmm. That's what they are, and the reason they're called a watch list because you got to watch them.
That's right.
Right.
That's right.
It's like that reminded what Jerome Powell said. It's only hot if you have some heat, right? It's called a watch list because you got to watch them.
It's not a watch list if you don't watch them.
It's not a watch list if you don't watch them. Okay, so yes, you got to go through your routine, and every day part of your routine is to go through your watch list. And whether you're creating those watch lists on your own or you're using the scouting reports, you got to run your trading plan. That's to go take a peek at those watch lists. People miss trades because they're not aware they happen because they don't see them. Because they get busy in their day, and I'm not saying this critically because we all get busy. I miss trades, you miss trades, we all miss trades. It's going to happen. It's part of this. It's part of the job being a trader, right? We're going to miss some things, but you can only make a trade if you show up and go through your routine.
Well, that's right. And that's why watch list and focus list and organization are so important, Matt, because then it does reduce how many you're going to miss. You're going to miss them. You're going to miss some.
Yep.
That's a part of it. C'est la vie. I mean, that is what it is. But you're going to catch a lot more of them when you're organized. When you grab those watches from the weekend reports, build them into your brokerage software, start building a plan for them. I think there's little things you can do to keep you on that organized track to make sure that you catch the trades when they are triggering, for sure. All right.
Yeah. I was going to say something. But
Go ahead.
I decided.
Go ahead. I don't know.
It made sense in my head.
All right. Well, when you're hot, turn the heat off, I guess. I don't know.
That's not what it's when you're hot, turn the heat off. Okay. We're just going to end every one of these in just stupid cliches everybody says.
We call them justicisms.
It's only hot if you have some heat.
That's right. That's right. Got to ride that lightning.
JPal / Yogi Bear / Matt Justice. There we go.
By the way, guys, I see quite a few comments here in the chat. If we missed anything, just buzz us an email, team@tackletrading.com. Hit us up on Twitter @tackletrading. That's pretty much all of the social medias. You can find us @tackletrading on Instagram, on Facebook, on Twitter. Make sure you're following us there. If you're new to our channel, subscribe, click the bell, come back and join us each and every day, Matt. We go live 12:30 Eastern time. Whenever the markets are open, we do our halftime report. The pro subscription is in the chat here, Matt. This is a pretty easy call. If somebody's out there, they don't know who we are, give them the 10-second elevator pitch on what the pro is and what it's all about.
Just ask the rest of our pros. They'll tell you.
Yeah.
I mean, I've said it before. I'll say it again, 10 seconds. You will not get better value, better education, better help as a trader, as a student, veteran, or beginner level than Tackle Trading provides for what we do on a monthly basis. It's just not going to happen. Nobody does the webinars. Nobody does the systems. Nobody does the educational programs to the degree that we do. Nobody does. And nobody does it to the quality. I've been in this industry for 15 years. I've developed educational and trading systems. And I'm going to tell you right now, nobody does for more value for less money than Tackle Trading does. Nobody.
And quite frankly, if you're watching this show right now and you're thinking about going pro, it's a no-brainer. It's a 15-day trial, but here's what the challenge I would give you. Do it right now, but also go use the content. Don't sign up for a trial and then don't show up to the webinars. The whole point of joining Tackle Trading is to get into the community, to put your butt in the seat and get in there and learn with other traders, learn with coaches, learn with people that can help you. Guys, great job today, Matt. Loved it. Cody, good job today. Just sitting in the background, kind of monitoring quality control. I like that, young man. Cowboys
he's still euphoric over the Cowboys win.
Cowboys look good.
If anybody watched that game, whether or not you like the Cowboys or
hey,
not.
Cody, how are you going to feel when they're 7-9 and they won the division at 7-9? I'm never going to let you live that down.
Well, they can't win at 7-9 next weekend.
Oh, are they 7 now? Do they have 7 now?
I think they're 500, right?
Now.
Yeah.
They're 7-7.
So are the Eagles.
Okay, so 8-8. You're going to be 8-8. You're going to beat the Eagles, and then you're going to lose to Washington, and the Eagles going to win. Oh nope, you're going to lose at 8-8.
We're not losing to Washington.
But here's where the optimism. This is what all fans do.
We're not losing to Washington.
The Giants won the Super Bowl at 9-7 one year. They went through. They beat the Patriots at 16-0. So these Cowboy fans, they still think they got a chance to win the whole thing, right, Cody? Because if you can get in the tournament. Just give the ball to Zeke.
That little backhand there. These Cowboy fans, they still think Tim's just bitter. His Bears aren't going to make it.
I just want to remind everybody that Tim called all the Cowboy fans liberals last week.
Not liberals, snowflakes. I get it right. They melt in that Texas sun. That's what I said. All right, guys. We'll be back tomorrow.
I'm Team Texas, Cody. I'm Team Texas, buddy.
Like, share, get the word out there. We'll see you guys
now. Mind you, I am wearing an Eagles hat.
Yeah.
But I said that.
Out of the Texas fans, Matt, the Cowboys or the Texans? Who are you taking?
Their fan base?
No, you got to pick one. If you're going to be Team Texas, which football team you're rooting for? Or UT?
I'd be UT? Yeah. No, I'd be Team Cowboy. If I had to choose, I'd be Team Cowboys.
Cowboys winning.
Doesn't the Cowboys and Jerry Jones represent what Texas is?
Oh, yeah.
Well, everything bigger.
Big.
Right, yeah.
Yeah, it does.
If you ever go to Cowboy Stadium and you're ever there, like if you're up in like the third or fourth deck and
it's the eighth wonder of the world. It's amazing.
It's just like it's so far away. You're like, how can the fan on the opposite side of me be that far away?
I would love to check out that stadium. I've not been. I would go watch a game there. There's no doubt about it, and see exactly what it's all about, what Jerry World has done there. Yeah, they are Texas, Matt. There's no question, which is why they're also polarizing. They're not exactly the most loved team in America by everybody. I think there's a lot of people who hate them Cowboys.
People love to hate them is what it is.
They sure do.
You have a
Oh, you
dedicated
whiny. Oh, my goodness. You guys are still holding on for the 90s. The Patriots are the most hated team in America by far.
Yeah, they're up there.
Okay. The Patriots may be the most hated team, but I think people hate Dallas fans more than they hate Patriot fans.
I don't know about that.
I don't know.
I listen to a lot of people just bash, and they're like, "Oh, Cowboy fans are the worst."
Boston fans are bad.
Laker fans.
The last 10 years.
Go down a rabbit hole.
No. Worst fan base in the world is Boston fans.
I don't know.
They hate life, and yet they've had so much success over the last 10 years. The Bruins, the Celtics, the Red Sox. I think they held every World Series, hockey cup, everything. I think they held everything for like 10 straight years, and they're still, everybody despises and hates us. No, the passive aggressive with the success has not led to an equation of liking that fan base.
Poor Sess. She's a Patriot fan.
She's like, stop.
Listen. Okay. I am absolutely going to be anti-Boston given the fact that I'm a Miami Dolphin fan. It's going to happen.
I feel like Boston has an educated fan base. I agree with most of what you said, but I do think they're checked in.
I didn't say they were ignorant. I said Boston fans are passive aggressive plus success equals nonsense.
Yeah.
Like it's just the passive aggressiveness gets worse. It just gets worse. Every time Keith will text me every August, "Hey Matt, you going to come to a tailgating game?" You know why I don't? Because I don't want to go tailgating with a million New England fans with me wearing Miami gear.
Oh, I'm sure they'd have a lot of fun. They'd get you some clam chowder.
Are you kidding me? I would be wearing a Patriots hat, enjoying the chowder and the beer with Keith. That's what I would do. I'd be a chameleon and just have an enjoyable experience.
What fan base out there, guys, just drives you crazy? Because all that rant about Boston, I still think the Lakers are my number one.
No, not with LeBron. I was going to say Lakers too, but
dude, I've been a Jazz fan too long. I know. I get it.
I get it.
All right.
We get it.
All right, guys.
What's yours, Cody? Real quick. What's yours? Mine's Boston fans. Tim's the Laker fans.
The Warriors, Golden State Warriors.
Cody,
the bandwagoners.
You should have went for the softball here and said Dolphin fan. Come on.
No.
I just said I was Team Texas. You've been calling them snowflakes. What are we doing?
Or Bears fan. You could have went for Bears fan as well, for sure. No, but who'd you say, Cody?
Golden State Warrior fans.
Oh, he just hates success, Matt.
Listen, I love success. I love what the Patriots have done. Bill Belichick, and even though I can't stand everything in Boston because I'm a Miami fan, but man, Bill Belichick's the greatest coach of all time. Tom Brady's the greatest quarterback of all time. That organization is a well-ran organization, and every organization around the world can look at how that organization is ran because it doesn't matter who's there other than Tom Brady and Bill Belichick and Robert Kraft.
Next man up. I mean, look at what they do. 100%. Yeah, 100%.
Are you kidding? What was I telling you yesterday about Brian Flores? The reason I like Brian Flores is he brings the discipline of the New England Patriots to the Miami Dolphins.
No,
he doesn't put up with anything.
They're scrappy. They're scrappy. I like it too. I mean, how many Patriot ex-head coach or coaches are now becoming coaches though? It's like every other NFL franchise.
Belichick hasn't had a lot of success in his coaching tree though.
No.
But I do like Brian Flores. I do. I like Brian Flores. And what's their coordinator's name? Josh McDaniels. I think he was a little young coming into that Denver job, but I think he's going to be a successful coach down the road when Belichick retires and he takes over the Patriots.
I think Teddy Bruschi in Tennessee is now doing it. They had the guy in Cleveland there for a long time. They've had a lot. I'd have to look up the coaching tree.
It's not Bruschi. It's
not Teddy Bruschi. It's I know now.
I know what you're talking about.
Yeah.
All right, enough about football. Let's get out of here.
I could talk football all day, though. Guys, we'll be back tomorrow with our halftime report, 12:30 Eastern. We'll be here live. Come and join us. We'll see you then.